Holly Shields here for Kalkine Media. Thanks once again for joining us. Let's talk luxury tax. What is a luxury tax? A luxury tax is a tax imposed on goods and services that are possessed by only the affluent sections of society. These goods are luxury goods. The idea is to tax the richer sections of society. Some of the items that come under luxury taxes include perfumes, luxury cars, and jewelry. This makes luxury taxes a progressive tax, as opposed to taxes that tax the poorer sections of society, the opposite of a regressive tax. However, there are instances of the luxury tax being levied on the luxuries of the lower income groups. The ethical reason for the introduction of luxury taxes was to prevent economic spending on unnecessary goods and non-essential goods. Conversely, in the modern world, the revenue earned from luxury taxes outweighs the ethical intent behind the tax. It can be implemented through a sales tax system, value-added system, or as a customs duty. So, when were luxury taxes introduced? Luxury taxes were first introduced in France in 1918. The purpose of the tax was to attack manifestations of wealth rather than the instruments of labor. A luxury tax would strike enjoyment, but not in the industry producing the luxury goods. The luxury goods were classified into two categories as follows. Obvious luxuries. This group included perfumes, yachts, liquors, and antiques. General articles. These articles were normal items that became luxuries past a certain point, for example, clothing items. There was an upper limit placed on the prices of these everyday items, beyond which these goods became luxury items. These taxes were not all well received by the public, as there were many protests in France. People perceived the tax as a tool for the government to earn more revenue. Thus, the luxury tax was eventually removed and was later introduced with major changes. England was the second country to introduce the luxury tax in 1918. Most countries were criticized for implementing the luxury tax with the intent of increasing revenue rather than checking spending. Thanks once again for tuning in. This has been Holly Shields for Kalkine Media.